Hey guys, so over the past few days, again, I got a lot of questions asking about what's happening to the US government. As you all know, there's a lot of talk, there's a lot of noise whether the US would be entering a recession soon. True enough, though, we've seen US markets drop massively as well over the past few weeks. And in conjunction to that, we've seen the Philippine market and I guess the rest of the world also get hit by this. So, this video will primarily focus on we're going to talk about is a recession coming, but above and beyond that, we're going to talk about also what is the US government trying to do in order for them to protect their economy, in order for them to prevent a recession from happening, or what's their take? Is this actually something that that the US government or the Fed or people in America should actually be scared about as well? So by the way, if you're new to this channel, my name is Marvin Germo. I'm a stock market trader, an investor. I trade Philippine, US, and Singapore markets, and the goal of why I create videos is so that we get to create a framework where people who are investing know what they're getting into, especially right now when you're seeing the markets drop, when you're seeing a lot of panic, when you're seeing a lot of people scared. Having the right information, having the right data will help you understand what's right, what's wrong, what's purely emotion, what's hype, and what's speculation. And I keep saying this all the time. The name of the game for you is to follow your logic, to follow your numbers, to follow either technicals or fundamentals for you to be able to decide whether you should buy, sell, avoid, or hold the positions that you have. So that's why we're going to break down what's happening in the US government, what's happening in the US economy, for us to know, is this something that we should be scared of? Is this something that is a very, very large trigger to sell or not? So, subscribe, like, share, and be part of this growing number of people learning and willing to invest. So, let's start. One of the biggest things that has caused markets to drop, that has caused global markets from New Zealand all the way to America, is basically the coronavirus. And please do note that what this does is it's not just because people are scared, but if you look at the context, everything is shut down. And if you try to uh, see how broad this is, number one, factories in China are closed. A big chunk of them are closed. Meaning, if I am Apple, Apple sells iPhones, iPads, computers, etc., and all of the materials, all of that would come from their factories in China as well. That being said, if those factories are closed down, it means that hey, all of these iPads, all of these laptops, all of these phones, the production of that will not be strong. It would be lower. That being said, Apple already said that their growth forecast for the year will be pretty much lower as well. So what does that mean though? The raw materials of what's being sold in China come from other countries, Indonesia, Vietnam, Philippines. They also export to China. That being said, if production in China is slow, it's slowed down, that means all of their counterparts in the Philippines also will also be hit as well. So that's one. That's a global trading aspect of all of it. If you also look at it right now, one of the things that people have not considered is that uh, airlines, tourism are down because of it. Emirates have closed operations, have closed their uh, retail flights. They only have cargo right now. Qatar Airways, they have massively laid off people. Cathay Pacific has slashed their operations. I think they slashed it by 95%. Philippine Airlines have ceased operations for a month. Cebu Pacific also has slashed their operations significantly. So it's hitting tourism, it's hitting travel. Then because people are not going out, it's hitting consumption. And again, I'll say this over and over, the 2008 financial crisis, we were literally protected because of all of the things that were happening in the US. It was a financial crash. The Filipinos were still going out, they were still spending as compared to right now, what's happening right now. People are not spending money. People are scared. No matter how much you bring down the airfare, if people are not traveling, if there's a restriction, if there's a lockdown, then you would not see a lot of transactions. And this is what I've been saying. The economy is made up of transactions. One man's buying is another man's selling. One man's selling is another man's buying. So what does that mean? When you see all of these transactions put together, when you see more people buy, more people selling, it makes the economy healthier. But lesser transactions means a weaker economy. That's why oil prices are low. That's why you see oil prices keep on dropping. Why? Because the demand for it is weak. We all like low oil prices, but the fact that there's low demand means that a lot of people are not consuming, a lot of people are not doing transactions, a lot of people you have to remember, if airlines consume a lot of oil, consume a lot of fuel, if they are not consuming fuel, it also triggers a lower demand in that particular industry. So the coronavirus is something I really believe is unprecedented. It's something that we've never seen happen before. It's different from the '08 crisis. It's different from the 1997 Asian financial crisis. This hits both the demand side and this hits also the supply side. All aspects of our economy is hit, and it's not just the local Philippine economy, it's all of the economies around the world. And just an update on the virus, there are 434,854 cases as from what I've seen, and based on this number of confirmed cases, we have 19,000 deaths and 111,000 have recovered from it. So this is something that's very good because the trend of the recoveries is up. For those who follow technicals, you know what I mean by this chart, but there's more people that are recovering than the ones that are dying. That's why it's very, very important. I'm making this video also as a, I guess, a public service announcement that please stay at home. If you don't need to go out, stay at home. If you Please stay at home so that the chances that you may spread it becomes gradually reduced, and we really have to lower the curve. We really have to lower uh, the spread of the coronavirus, because if not, it may get worse, especially in the Philippines, that we don't have enough beds, we don't have enough hospital spaces, we don't have enough testing kits, sanitizers, doctors, frontliners to be able to combat all of this. So please stay at home. But above and beyond that, these are the cases per country, and that's why I want to zero in on the US. Over the next few days, the cases in the US will continue to spike up. Over the next few days, the United States will overtake Italy and China in the total number of cases. New York is spiking up already massively at such a rapid rate, and a lot of people are already fleeing New York because of the lockdown and the quarantine that's happening there. I'm gonna talk about that in a bit. But the USA has surpassed Spain and Germany. As you all know, Spain already had problems in containing it, but the United States of America has already surpassed them. There have been projections, and I've seen different reports of this, that the the whole uh, the whole number of people that will be infected projected will be around 70 million to 150 million Americans. So it's projected that 25 to 50% of the population in the US is projected to get infected. That being said, there have been a lot of lockdowns in different states in the US already. And as you all know, as what I've mentioned, when a city gets locked down, when a state gets locked down, the whole economy in that particular area shuts down. Tourism, transport, commerce, consumption, no one going to the movies, no one going to the malls, no one shopping, no one eating, no one dining out. So literally you will see a lot of small businesses who have very, very little cash flow will normally get hit. And the reason why, so when things shut down, it's not good on for that particular economy. And if, as you all know already, we've already seen it, how it affected Hong Kong. Hong Kong is pretty much devastated. Their economy is pretty much hit for all of the rallies that happened last year. Then this they were one of the first cities that got shut down. They were one of the first cities that got hit, and their economy is taking a toll. And this is gonna be on a broader scale in the US, as there's a larger chunk of areas in the states, especially New York, where New York is one of their largest capitals, largest cities, that will get hit by this as well. So the lockdown will pretty much impact the U.S. economy. And what I want to mention also in this is we don't even know how big the scale is yet of the number of people infected, because people just kept on going out in the United States of America. That being said, I want to talk about this. There's a lot of talk that this coronavirus will bring the U.S. economy into a recession. Please remember, the general textbook of a recession is two consecutive quarters of the economy contracting or meaning slowing down or going down or not growing. So the entire context of this is that they're actually saying that this recession will be pretty severe. It will be even stronger, bigger than the 2008 financial crash. That being said, this is what the US Fed is doing. They're using what they call quantitative easing. This is something that they did already in 2008 to combat the global crash in the 2008 crisis. So, a couple of things that they did in 2008. Number one was they brought interest rates down way below, super close to zero. And that's what they did also now. Interest rates right now in the US are close to zero. Please remember this. When interest rates are close to zero, what does that do? It encourages entrepreneurs and encourages other people to start borrowing. Lower interest rates encourage people to start borrowing. If more people borrow, then more transactions are made again. When more transactions are made again, the economy becomes more robust, more healthy, meaning more businesses will have more wiggle room to be able to expand, to be able to uh, go on with their operations. People can still buy cars, people can still buy houses because interest rates are lower as well. So that's what lowering interest rates would do. It helps protect the economy, it helps hedges the economy, it helps things get better because more transactions are done. And that's what they did in 2008, and it was very, very successful. But above and beyond lowering interest rates, they did quantitative easing. What does quantitative easing do? Quantitative easing is basically the US government, the US Fed, uh, buying back all of their buying back bonds, buying back debt. But above and beyond buying back debt, what they would normally do is they would print new money, and that new money that they would print out is what they will use to buy back those bonds, thus injecting new money into the economy. And again, as what I've mentioned, more money circulating is good for the economy. I guess the only downside to that is this: the more money you print, the more money you produce, you increase the chance of inflation getting higher, increase the chance of inflation pushing and making prices higher for people on that particular economy. But that being said, that's their battle plan. They're just gonna inject money into the economy and use that money to pay out bonds. And as those bonds are paid out, again, that entire money that got used is what's going to be used to circulate in the economy. And here's the thing: what's so different now is this: the Fed is going to do what they call QE infinity. They're just going to print and print and print and print and print and print and print until the economy gets better. So it worked in 2008. It's too early to tell if it will work today, but if there's one thing that I know is this: markets after that started to rally. Markets after that started to go up even further. So if you see this entire upward trend for the day, the Dow Jones is was up 11.37%. It showed the positive response. It showed how people reacted to it. It showed that there was a positive movement. There was a positive insight on a lot of investors about this as well. And for Filipino investors watching this, it spilled over to Philippine markets. The Philippine markets from 4,700 closed above 5,000. It was up 5.31%. Please remember, the intraday low of the Philippine Stock Exchange Index was close to 4,000 just a few days ago. It's now back to 5,000 because of this sentiment as well. If you look at this, majority of the stocks with the larger amounts of volume, larger amounts of value turnover, AGI 1 billion pesos up 4.23%, Ayala Land 639 million up 5.50%, SM Prime 5.88% up, value turnover 482 million pesos, Jollibee 3.63, 339 value turnover, SM 7.02% up, 373 million value turnover, AC 439, 304 closed at 460 pesos per share, 343 value turnover, BDO closed at 100 from 94 with a 322 million value turnover. So large value turnovers for certain companies and larger amounts of buying across the board as well. So as you can see, even here, Jollibee traded 9,843 times, BDO 8,437 times. Across the board, lots of stocks were pretty much green. And just to end, if you look at this stock futures, which denotes a more which which tells or depicts how the markets will open, is also up. Why? Above and beyond this, the White House and the Senate reached a stimulus bill to fight against the coronavirus or to give funding for coronavirus. Please remember, the biggest problem when cities would lock down is a lot of people won't be able to have jobs. When people don't have jobs, I think I mentioned this in previous videos that majority of Americans don't have savings. Some of them only have 6 weeks worth. Meaning, if this lockdown would drag on for more than 6 weeks, majority of Americans won't have enough money to take care of their day-to-day necessities, their rent, their electricity, their food, their other bills, their mortgages, etc. And above and beyond that, some businesses also don't have enough cash. Meaning, if this lockdown, if this crisis would drag on, also would go on for 1 month, 2 months, 3 months as well. The biggest problem also is a lot of the businesses don't have enough cash to be able to sustain their operations. Some of them may not be able to pay their employees and give them payroll as well. So that's what I'm saying. The biggest context of this is that the lockdown, or at least they must find ways on how Americans can have money and how those small businesses also will be able to thrive. So two things are critical here. Number one, the citizens must have money that they need to operate. Number two, the small businesses, and I think that's also the context here for the Philippine markets. There must be enough. There must be enough funding that they don't default, that they don't close down, because there will be a larger effect in the economy if these small businesses will close down as well. So I want to hear your thoughts. Comment. Do you think this is enough to protect the U.S. government? This is enough to prevent them from falling into a recession? Will the US government go into recession? Yes or no? And what's your narrative based on all of this? Do you think the markets, the Philippine markets, will continue to go down based on this? Or is this chance for the Philippine markets to reverse back up? We are at the 17-minute mark. I want to know, did you guys stay up until the end? Do you guys like this format? No music, no slides, no picture of me. No, no, my face is not seen, but I hope that this is something that gave you enough insight about what the Fed, what the effects of the coronavirus is in the U.S. economy, and how the U.S. economy also impacts us as well, and what quantitative easing is. Is this something that's good or bad for the general move of everyone? By the way, thank you so much. To all of you guys who asked about me making videos about quantitative easing. So this is dedicated to all of you that asked Obetayag. This video is also for you. Thank you so much for requesting it. So if you guys have any other questions, you guys have any other requests, just put them in the comment section below, and I'll try to make videos on top of that as well, because at the end of the day, I want you guys to be able to uh, during this lockdown, build your skill. I want you guys during this lockdown to not see this as a time of crisis, but just see this as a time for you to be able to pivot, build new skill, take your finances to the next level, because at the end of the day, you have to use this time to build you. You have to use this time to make you better. Don't just waste your time idling, doing nothing, thinking and waiting for things to get better. No, don't wait for things to get better. Hustle so hard that it gets better. So I guess that's it for now. I hope that you guys uh I hope that you guys learned a lot from this, and I hope this video helps you, pushes you to win and to trade the markets with confidence, because again, at the end of the day, that's all I want, guys. I want you guys to win. I want you guys to be able to do great stuff as well. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.